In this video, I'm going to be showing you how you can predict the next candle move. Why this video is very important is that you need to know how to predict the next market move, where the market is. You need to know where the market is going to, so that at any point in time you come into the market, you can always trade the market and be on the right side of it. And once you're on the right side of the market, definitely you will be profitable. So if you want to know how to predict the next candle move, how you can trade your setup, then you need to watch this video to the end. So you need to watch the video to the end. So in this video, I'm going to be showing you the power of three. I'm going to be showing you the power of three. So the power of three, which we know as the accumulation, manipulation, and distribution, is a candlestick pattern, right? It's a candlestick pattern or a candlestick formation whereby every candle is a range and it has its own power of three. Power of three on the lower time frame, in the sense that if you look at the candlestick, the particular time frame you are looking at, it has its own power of three. The 1 hour has its own power of three. The 4 hours has its own power of three. The daily time frame has its own power of three. The daily candle has its own power of three. The weekly candle has its own power of three. Even monthly candle has its own power of three. So once you understand the power of three, the accumulation, manipulation of a particular candle, obviously you can predict what the next move. So this candle, you understand what the power of three. If you zoom in on a lower time frame, you will see that a range forms between the highs and the low on a lower time frame. So once you are getting it wrong, is that once you are looking at a candlestick pattern, right? Let's assume this is this is a daily candle. Now, once you mark the high and the low of this daily candle, by the time we go down to a lower time frame like the 1 hour time frame, 15-minute time frame, obviously this is what we'll be seeing. We will see that once the market open, we'll have an accumulation, which is always our consolidation. Then we'll have a manipulation down to a manipulation. Now, if you are going to be if this is a bullish candle, obviously if this is a bullish candle, so we have a manipulation down to the side of the opening price. If we want to be profitable, then you must pick your entry after the manipulation is being done. Right. So after the manipulation, then we'll have the distribution, which give you the body of the candle. And one thing you should know is that for the accumulation, your accumulation will always be below your manipulation will always be below the accumulation range, below the opening range of the candle, depending on the candle that it is. So that's one thing you should know about the accumulation, the manipulation. Now the accumulation, your manipulation will always be your weak. I'm giving you a pro tip here now. Now at any point in time, the candle you want to trade, the weak of that candle is your manipulation. So that is what you use to get the manipulation, and then so that's how you get it. So if you zoom on the lower time frame, you will be able to see the structure, you see the manipulation clearly, you see the accumulation clearly, and you see the manipulation clearly, and you see the distribution clearly too. Then the range of the candle. The range of the candle consists of three continuous it consists of three continuous phases: the accumulation, manipulation, and the distribution, which I've just explained. Right, which I've just explained, right? So now this is the psychology of the power of three. So for the power of three, it can be a bullish candle and it can be a bearish candle. They are different. For a bullish candle, the power of three will be you have the open, it's going to open below. Then you have the manipulation. See what I'm telling you? This is the manipulation phase of it. Your weak will always be your manipulation. That is a pro tip. That's a pro tip. So your manipulation will always be below the opening price. And once the manipulation is done, you can start putting yourself on the trade and see and take your entry from there, and then you can take the distribution side of it. So for the bearish candle, the market will open, the candle will open up, and then you have the manipulation to the upside, and you have the distribution to the downside. Right, so that's the manipulation for you. That's the manipulation. So that's the power of three. That's the psychology of the power of three. So for you to see it clearly, to see this pattern clearly, you need to go to the lower time frame. You will see the consolidation and you see the manipulation. right? You see it clearly on a lower time frame. So that's the what? That's the power of three. Now we have the what? The candle range pattern. The candle range theory pattern is just a what? This is a pro tip. Now for you to get the what? The power of three, if you look at this pattern, it's a very profitable pattern. Some will call it three bar candlestick, some will call it swing high. All these things, they are just the same thing. Now you need to understand the psychology behind this candlestick pattern. Right? You need to understand the psychology. So it's a candle, is a three bar candlestick, right? Where you have the what? The first candle. The first candle will always be the one to set your range. It's going to be the one to set your range. So once the first candle set your range, right? So once the first candle set your range, you have this. So the first candle set up the range candle. This is the first candle now. This is going to be the what? The range of the what? The move that you have. The second candle takes out the what? The liquidity of the first candle. This is, if you understand the psychology of this candlestick pattern, then you can trade it. So the first candle now, this is a bullish candle. Obviously, we are for this kind of pattern now, this is the swing high. We are looking forward for a sell. So the first candle you will see will be always be what? A bullish candle. It's open below here, right? It open below here. Then you have your what? Manipulation here. You have your distribution. And the next candle now, which open, it open and then it took out the what? The liquidity that you have above this one, the high of the first candle, which sets our what? Our range. So once you have this candle and then this the second candle now close back inside the what? Inside the range of the first candle which set our what? Our range. You need to understand that word close back inside. It has to close. Right? This is the opening of this candle. It manipulates to the upside and then this is the close. It has to close inside the range of this what? This first candle is very, very important for this pattern to be effective. And then you have the what? The third candle. The third candle now breaks out the range in the opposite direction. You can see that okay, now the first candle set up the range, the second candle takes out the liquidity, right? Takes out the liquidity of the buy that we have in this first candle, and then this third candle will set up the range. Now, there is this common saying that if market maker want to buy, they need to what? They need to, if market maker want to sell, they need to buy first, and then from the buy they sell. This is what we are saying when we say if for market maker to buy, they need to sell first. So this is the psychology, and then for the bearish side, for the bullish side now, it's just the reverse is the case. Reverse is the case. So you have the what? The bearish candle that will set up the range. The second candle will take out the what? The liquidity here. Brown. Break out the liquidity and you can see that it has to close inside the range of this first candle. Is very, very important. The third candle is what you want to be what? You want to be trading. Right? Is what you want to be trading. So it's what you want to be trading. So we have the what? So this is it. So the candle rate theory is of two types or three types. We have three types of it. So we have the standard three candlestick. So this is the standard three bar candlestick pattern, right? This is the standard CRT candle. And then we have the what? The second one now, which is the what? Which is an inside bar CRT pattern or candlestick. Right. So the difference there is just that it has like four candles or so. Now you have the first candle that will set up the move, right? It's going to set up the move, and then you have another what? An inside back candle that will close inside the range, but it's not taking out the what? The liquidity. So it's going to be the third candle or the fourth candle. It can be any number of candles that will take out the what? The liquidity of this. So once this is done and then it closes back inside the range of this candle, then you can trade the what? The next candle. You can trade the next what? The distribution. You can trade the what? The distribution. So in just a common sense, this is what we are saying. This first candle is your what? Is your accumulation, and then the second candle is your manipulation, and the third candle is your what? Your distribution. That's what we are saying in a simple layman term, right? That's what we are saying in a simple layman term. So the inside bar pattern. So the first candle set up the range, just like the first candle, the first CRT pattern that we have. And then the second candle is an inside bar candle. The third candle is sweeping the what? The candle which take out the liquidity by a wick. A turtle soup that we can also call it what? The turtle soup. The manipulation we can also call it a turtle soup, right? We can call it turtle soup. Then the fourth candle breaks out of the range of the opposite in opposite direction of the what? The manipulation that we have. So that's your second, that's your what. So you need to understand this thing. It's just what this kind of trading system is just a trading system that uses liquidity. For you to be profitable in the market, you need to what? You need to understand liquidity. And one of the best way you can understand liquidity is using this CRT candlestick pattern. Right. So we have the third what candlestick CRT pattern. So this one is a multiple but it's a multiple CRT spanner in the sense that what the difference is just that it has a lot of candles. So the first candle will set up the what? The range of the move, and then you have several candles that will just be closing inside. But what the liquidity is set up here now. They are just trying to grab liquidity with all these things. They've not gotten enough metal. You can see that this candle is very, very large. The volume in this candle is large. So you can't expect the market to cover it all within 3 moves, within 3 candles. It's not possible. That's just one thing you should understand. When you're looking at those things, you need to look at the volume. The volume is very, very high. This is the volume, which is the what we call the what the body of the candle. So you need to look at the what the body of the candle, which is the volume. So once you have a very large candle, okay, you should expect some kind of consolidation that will be what that will be there. So this is the CRT high and this is the CRT low. So you just need to pay attention to the volume of the candle that you are having information. So let me give you a pro tip now. A pro tip that I'm going to give you now is that now you need to so the pro tip is that you should always trade away from liquidity soup, right? Always trade away from the liquidity. So this is the liquidity soup. Liquidity says that it's a pin back candle. Let's just call it a pin back candle. It doesn't close back. They just grab the liquidity that we have below here. They grab the liquidity that we have below here and then they took it out. So this is your what? So this is your liquidity graph. So always trade away from it. So in the sense, that's why I just told you that if market maker wants to buy, they need to sell first. The process of them selling first is what? Is to grab liquidity. So once they grab liquidity and then they trap a lot of people here. You can see the candle is very voluminous. The body of this candle is what? Is large. So once they trap liquidity and see that okay, we've trapped a lot of people in this move, then they reverse the market back. So once this candle closes back inside this range, it's telling you that what? There's a reversal, right? So that's the first pro tip. Always trade away from the what? From the liquidity soup. And then we have the what? The second one is that best place to enter a trade is based on what? On CRT at a manipulation phase or the second CRT candle just at the wick. This is what I'm telling you now. Now this is the second CRT candle. So the best place you can enter your trade is that once this what? This second candle now closes back inside, you just wait for a little retracement back into the range of this candle and then you enter your entry here. I'm going to be showing you the entry techniques that you use with this strategy tools. It's a very profitable strategy. If you have seen me flip account times without number, this has always been what I've always been doing, right? So that's your pro tips. So the entry text is now, so we'll go to our entry text is now. So the entry text for this strategy is just simple. If the high of the candle range is swept, right? This is the candle range here. So once this high is swept, right? Go to a lower time frame and look for a shift in what? In market structure or your change of character, and then you enter a sell trade and they return to the available PD array. Your PD array can be your order block or your fair value gap. You are very conversant with my channel. You always see that I always keep telling you that my entries are always on what? On order block or fair value gap. That is just simple truth. So that is what I'm looking at. This is the pattern that I trade, and you see most of the time I flip my account. It's a very profitable strategy. Just take your time and understand it. So that's the entry techniques that we have. So that is for what? That is for a bearish scenario, and this is for what? For a bullish scenario. So the bullish scenario is just the reverse is the case. So once they took out the what? The low of the what? The candle range, and then once they took this out, it is from this candle you start going back to from your second candle that you go back to your what? To your lower time frame and look for your market structure shift or change of character. And then you now wait for what? After the market structure shift, you wait for what? For a return to the next PD array that is available, and then you take the what? At other block. So that is the entry techniques you use for So the take profit and the stop loss. Of course, a good profitable strategy must have all these things. You can see the way I started from the beginning. Your take profit, your first take profit should be the 50% of the range of the what of the candle range, which is this. So it should be the 50% of this. That's your first take profit. Your final take profit should be the high. In this time now, it's going to be the high of this what, because this is a bullish scenario. So it's going to be the high of this candle here, the high of this candle here. So that's going to be your what? Your second take profit. Then your stop loss should be few pips away from your supply zone, from your entry zone. So your supply zone now, this is going to obviously you have a what? A fair value gap here or another block. So your stop loss should be some pips below it, because you know that they've taken the liquidity, they can't come back low, and then you can actually put your stop loss below the what? The CRT, below the low of the range. That one is more safer. But if the risk, and you can use the risk to reward ratio of 1:2, 1 ratio what? Ratio 2. The choice is yours. But this is the standard what? The standard take profit, your entry techniques and your what? Your money management techniques. You can use whichever one that is convenient for you based on your what? On your time frame. So now the time frame that I will work with now is this. So the setup time frame and the entry time frame. If you are using the monthly time frame, then you need to your entry is going to be on daily time frame. And by using daily time frame, your entry is going to be the what? The 4 hours time frame. And your 4 hours time frame, as in your 4 hours time frame to frame your setup, then your entry will be your what? Your lower time frame will be your 1 hour. And for 1 hour, your lower time frame will be your 15 minutes or 5 minutes sef. You can use the 5 minute too. And then if you are using 15 minutes, then you can use the what? The 1 minute time frame or your 3 minutes time frame. So this is the what? The entry, the time frame for this strategy. So that is time frame for this strategy. The one thing you need to understand is that you need to put in place your what? Your time frames. It's very, very important. It's very, very important. So now we are getting to the gym of this. We are getting to the gym of this whole thing now. Right. So now, if you are looking for the CRT candlestick pattern, right? Your candle theory for this strategy to be effective. You can see for those who are on my what on my channel, you've always been saying that I've always been saying that what time and price. This is what I mean. This is what I mean with time and price. This is what I mean with time and price. So if you want the strategy to be very effective, these are the time that I look out for trade. Time to look out for my setup. I start looking out for my setup by 6 a.m. to 9 a.m. London time. Now 6 a.m. to 9 a.m. that is my own time. My own time here is in Nigerian, so it's GMT +1. But for the London, it's going to be 2 a.m. to what? To 5 a.m. That is the time I start looking for my what? For my setup. And my trade entry period is going to be between 10 a.m. to 2 p.m. London time. And usually I stop trading by 2 p.m. to 4 p.m. London time. So that's my trading session for you. So that's my trading session for you. And then, so one of the trading, so let's go down to what? To chart example. So that I will show you the what? I will show you the chart example, how you can use these things. Right. So let's go down to my let's go down to my trade. So this is volatility 25. This is volatility 25. I have my volatility 25. So I already had my indicator that I use for it, but let me just show you the what? You can't do the theory now. So this is it. So this is, let's look at down here. So this is 5 a.m. 5 a.m. is going to be 6 a.m. So this is what I'm saying. So this is 1 hour what? So this is 4 hours power of 3 that I actually want to do. So you can see this is the what? This is the accumulation. It's actually a what? A bearish candle. This is the accumulation. You can see the accumulation here. So you can see the accumulation here, which days never no, don't let me use okay. So you can see the accumulation here, it opens here, right? Then a little bit of accumulation, and then we'll manipulate to the upside, and you have what? The distribution like this. Now, if I should go down, this is 4 hours power of what? 3. My 4 hours PO3. So now this 4 hours PO power of 3 now, right, or 4 hours CRT now. In the 4 hours candle, you can see that we'll have 4 different 1 hour candles, right? 4 different 1 hour candles. So to get it right, you just go down to your lower time frame. So you go down to your what? To your lower time frame, right? So let me mark this out. Let me put an horizontal line here to demarcate where I'm going through. So what you will be seeing, what you'll be seeing on 4 hours time, on 1 hour time frame now, this is what you will be seeing. You'll be seeing your CRT candle, right? You will see your CRT candle, you have your open, and then you have the what? This is going to be the what? The second candle. You can even confirm that from without going down. This is 6:30, right? This is what? This is 5 o'clock. That's 1 hour. Then you have what? Look down, you see that we have 6:15. That's the second 1 hour. Look at what happened there. They took out the what? The liquidity here. Let's just go down to 1 hour for you to see. Okay, here we go on what? On 1 hour time frame. Now, here we go on 1 hour time frame. So you can be able to see, you can see the CRT. See how the CRT pattern. Look at this is the first candle. It opened, manipulate to the upside, and then you have this what? This candle to close below, right? To close below here. So this is your what? This is your first candle, this is your second candle, and this is your what? Your third candle. So you can use it first. So this is my London, my CRT with London, right? That's my CRT with London. So remember that I'm using the what? The 1 hour time frame. So I can go down to my what? To my 5-minute time frame, and then from 5-minute time frame you can see the manipulation clearly, and you can place your what? Your entry. Right, so let's go to 5-minute time frame. So that's the CRT pattern. It's very what? Very profitable. Just do sure you do your, so you can see what I'm saying. See the what? See the accumulation. If you are not even clear with the accumulation, you can still switch your chart to what? To line chart. You will see it clearly. See it. I see. So it's just what? That's the CRT. That's how you use your CRT. It works on any pair. It works on any pair. But so you have your what? Your CRT. So your entry will be after you have the what? The change in market structure. Now, so let's go down to the deep down on this. So we have the what? A break in market structure here. This candle break it here, and then you have this low here. This is your break in market structure, right? This is your break in market structure. So you can enter right from here, return back to other blocks. So on 1-minute time frame or 3-minute time frame, you can see the structure clearly, right? You can see the structure clearly. All right, so you can see the structure clearly like this. So your stop profit will be there. So you target the what? The low of the what? The CRT, which is there. So meanwhile, if you are here to subscribe to my YouTube channel, please do here to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new comment. And if you actually find value in this, please hit on the what? The thumb up and give me a like button. I would definitely appreciate it. And then please do well to what? To subscribe to my channel and share for other traders to what? To benefit. And if you see any other thing you want me to talk about, please kindly let me know. Drop it in the comment section. I will definitely respond to it. So this is volatility 25. You can try it on currency pair 2. The same thing applies to currency pair 2. The same thing applies to currency pair 2. Let me just use my, so you have that. I hope it shows here. Oh, sorry. So you have that. So it's applicable. Okay. So it's applicable there. So it's just there for you to just work with it, and then you find values in it. Take your time to practice. Until the next time we'll see, stay profitable. You need to be profitable. Trading is easy, just for you to what? To be committed and what? And stay profitable. Thank you very much. See you next time.